Hi, you're listening to the Condo Expert. This is Linda Pinizzotto, and I today have a fabulous guest, Ted Tsiakopolis from CMHC, Ontario Regional Economist. And he's going to give us a little bit of an inside view of Canadian housing market. Where are we right now in 2013? And I guess some of it might have been projected of what was happening in the fourth quarter of 2012.
Yeah, I would probably characterize the market in a period of adjustment right now. We have seen sales and housing prices peak, and I call this a near-term peak. I don't think that we're going to be floating lower indefinitely into the future kind of thing, but we did see housing sales and prices peak in the spring of 2012, and we've seen sales and prices come off a bit. The good news here is that the adjustment has been very orderly. It hasn't been cataclysmic. It's very easy to pick up a newspaper, listen to the news, and say, hey, we're in the early stages of a real severe downturn. It's very, very easy to reach that conclusion because there's so much noise out there. There's so much sensationalism, gloom and doom. We believe that the market is finding a new equilibrium. We think by the end of this first quarter, it will have reached a level that we think is sustainable, moving through the longer haul. And I think we're going to build, believe it or not, from that level. So I think we're not going to see the kind of growth we've seen in the past. I think you're fooling yourself if you believe that prices are going to grow by 6-7% over the next year, over the next couple of years. I think it's more likely we'll see prices remain relatively stable in 2013. And, we're a little more bullish in the second half of this year. We think that prices will start to creep up again. The real question is what's going to drive that.
Right, exactly. Well, it's funny because some of the reports that you sent to me, I, of course, took a look at them. I'm not no expert on this, and that's why you're here today. Interesting enough, employment growth, totally a key factor.
Yeah, employment growth hasn't been the greatest in the province of Ontario, I have to say. In 2012, we saw employment growth of about 0.8%. That's the slowest rate of growth we've seen in over a decade. However, in November and December, we had some pretty strong job growth. It looks like the labor market is coming back, and employment is very important for the housing market. And I think what's happening here is that the United States, it's finding its footing again. The U.S. economy is really starting to move. The U.S. consumer has been in hibernation mode for a good part of 4 or 5 years. U.S. consumers are starting to spend. We're seeing it in the U.S. housing market, the U.S. car market. Those are really important industries for Ontario because, of course, we export these kinds of the materials, the products that go into the goods that are being consumed by the U.S. consumer. So that's telling us that, the labor market is showing some signs of recovering. And we think that employment growth will start to pick up in the second half of this year and will provide that underlying support for housing. Yeah.
So that'll make a huge impact. That should change considerably.
I think what it's going to do is it's going to, this sort of downtrend that we've been in since the spring of 2012, it's going to stop it in its tracks. We'll see the housing sales stabilize, I would say, by the spring of this year, and then we'll build from there. But as I said, not the kind of growth we've been accustomed to, moving forward. So
it sounds like, stable growth is extremely good. Sometimes these really highs and lows and highs and lows. Stable growth is, as far as economic stable growth, I think people can have expectations and be able to not have fear. Because, a lot of times fear is a little bit more of uncertainty. So if uncertainty is out there in the marketplace, it's a kind of a domino effect.
Yeah. What I try to do when I go out, we always get invitations, and we spoke at the Carson Dunlop, is give people the facts. Sometimes economists, depending on what organization you're with, you get labeled as an optimist. I consider myself a realist. We kind of look at the data and provide information to housing consumers so that they can make informed decisions. Information that's not biased in any way, that it's unbiased. Right. And I think there is an opportunity right now if you are a buyer. Conditions in the housing market today in Toronto are the most accommodating they've been in over 2 years if you are buying. And what I mean by accommodating is there's a lot of choice in the marketplace. So buyers have the opportunity to take a step back, there isn't this pressure to get a deal done anymore because we know that interest rates are going to stay relatively stable. So we talked about the job market, but interest rates are also important.
Oh, absolutely. And, interesting, you talked about the data. I looked it up, SAR, S-A-A-R, Seasonally Adjusted Annual Rate. So for the audience out there, we need to know what SAR is. We're going to talk a little bit more about SAR with Ted Tsiakopolis, CMHC, Ontario Regional Economist. It's Linda Pinizzotto, the Condo Expert, and we will be right back.